I'm really excited to introduce our first practitioner panel, which will be led by Stacey Widlitz. And this panel is entitled The Super App, Financial Inclusion, Investing and Integration. Stacey's a recognized FinTech, retail and consumer expert, a spokesman on CNBC, and an entrepreneur running her own advisory firm. And she'll introduce her panelists. As a reminder, this panel has no Q&A. Stacey, take it away.
Thanks, Kathleen. It's such a pleasure to be here as a Stern NYU alum. I won't disclose what year. I'm so thrilled to be facilitating this discussion today about financial inclusion, investing, accessibility, and integration, the super app. I'm thrilled we have three amazing panelists today. We have Chenni Xu, Head of Communications for the Americas of Ant Group, Claudio Esposito, VP of the Banking Product at Stash, and Marcelo Rins, Chief Product Officer at Ualá. We've heard a lot today. You know, the headlines have been all about us versus them lately. When it comes to investing, it's Reddit versus Robinhood versus the hedge funds, nonstop coverage. And in a sense, it's really unleashed the awareness of the power of the individual, as we heard about before, and the individual investor specifically, and also has been really a wake-up call, I think, to institutional investors. Today, we're going to hear about technology that actually enables financial inclusion and investing accessibility. So I'm very excited about this topic, and it's very, very relevant in today's news. I wanted to start off with Marcelo of Ualá. In Argentina and your newer market of Mexico, I've heard you say you're freeing the consumer who has been condemned to cash, which I think is such an impactful way to describe what you do. Can you talk about the foundation for Ualá, because you have really created the basic building blocks of a financial system for so many?
Sure. Well, thanks. Welcome, everyone. I started three years ago in Argentina. What we wanted to do is basically this building blocks that you just mentioned. We just wanted to give the people just a payment mechanism. People they were not able to buy anything online. There were security concerns regarding how they are using the cash and that they can get lost or stolen. So just a MasterCard card helped them a lot. Just in that sense, they were able just to buy anything on Netflix. They were able just to do a bill pay, something that is super, super normal in the rest of probably the countries. So we started with that three years ago. Right now, we just issued 2.7 million cards. 8% of Argentina right now has already a VALA card. From there, we started understanding a lot of uses that we were not super aware of. And we continue with that path, giving them, for example, a loan if they were short of money, and a savings plan if they had an extra money. With that in mind, what we're doing right now in Mexico is doing something similar. What we call those the basic blocks. Mexico and all Latin America is super unbanked. 50% of the population doesn't have access to a bank account. So what we want to just get into the part allowing the people to start with the financial products and to start integrating on their financial life, just like that, with the things that they use the most. So we start with a card and then bill payments for whatever they want to do, if they want to pay the light or their energy, and then just installments. This is the way that we thought the whole strategy, and right now it's been working pretty well.
Will you get into, I understand it's amazing to me, the stat that over half of people in Argentina don't have a bank account. So there's so many basic things, like you were telling me, it takes 40 minutes to go and pay your bill. It's just basic things about life. Are you also more of a financial management app also of helping people budget? Or do you see moving in that direction?
Well, in that sense, what we do is basically giving the information about the way that they're currently using their money. For example, we have a PFM so that the people there instantly can understand, okay, I just paid something on Starbucks, or I just bought a coffee. Okay, this is part of your restaurant budget. And instantly they can start billing the things that before that they just doing it on a piece of paper. And I think that online was something that was not in that good shape in Argentina. So to instantly being able to do that was something that helped us a lot.
What was, I'm always so curious over the last year, consumer behavior adoption. What kind of adoption did you see in digital wallet? What was the exponential growth like of your consumers?
Well, from 0 to almost 3 million in 3 years. So when we first started, there were no fintechs. The financial banks were just starting. The numbers starting being super surprising. We were the first on the market to do that. People start engaging pretty deep on that. And as I said just before, the online experience was something super differential. And on that sense of the financial inclusion, just teaching and helping the users understand their money was the one that just moved this exponential growth a lot. And during the pandemic, I don't know, the growth of bill payment was like 200% per month on a yearly basis. That grew just as much. So these kind of use cases that you don't think are the ones that work the most. So we just need to launch the products to the market to understand it. Installment had a similar growth during the pandemic. Every year you get surprised by something different. Yep.
It's one of the big obstacles to obviously the banking that we've all read about is that the fees are so high and so many people can't afford it. What are you seeing in the market in terms of traditional banking and other players in terms of lowering fees and making banking more accessible in general? And do you see it as kind of a winner takes all, or a group of winners there's room for in the market?
Yeah, not at all. Not at all. I do think that there is a space for a lot. Actually, the bankings, they just learn and they can basically lower the fees and they can just start competing easily with the others that happen. I don't know, in Europe with all the fintechs that came there. Banks, they're not dumb at all. They're super smart and they can do the same thing, maybe not at the same pace, but they can do that. And that happening in Argentina. We started with 0 fees. You didn't have to pay for absolutely anything. And right now there are other digital banks that they're doing the same, and the banks are lowering their fees as well. And in that sense, the thing is that the more competition is, the better. The banks can realize that there is a space to grow out there, and the most value is going to be getting by the end user. So lowering fees is part of our purpose. Right now we went with 0 fees. We were called crazy. Why are you? But literally, when we started, it's like, why do you want to give a product for free that people are willing to pay for? Well, it doesn't work that way. There's a lot of people that is neither willing or can't pay for that, or they don't know that they can even do it. So that is when we started. Right now, we're just on, the market is on a different shape, I think.
Interesting. And it's interesting how you're using technology to make a consumer-centric product. And I'm interested how do you use data in terms of shaping product or looking at what other products you should be pushing to your consumers, or even just identifying trends?
Good one. Well, I think it's super interesting what happened in the past few weeks with GameStop and Robinhood and the way that they were just using that to optimize their product. Transparency, I think that is crucial there, and just being super clear on the way that you're using the data and which is the value that you're giving the end user for that. So I think that most people is willing to give some part of their data or their data if they get value out of it. So being super transparent, one of the motives of us is this financial inclusion. And for that, you need to de-dramatize financial products that sometimes they're not so easy to do. So our approach is just we use data, obviously. That is a major asset for everyone in the market. We use analytics and transactional data but we use it with qualitative approach, just with UX, and we interview people and we cross those. We try to correlate that data in order to understand if the product is being understood, if people can use it, and how we can optimize it given that kind of thing. But the things with super gamified approach to it, sometimes you get mixed up with the clarity and the transparency of which is your own purpose to it. And I think that is the limit.
Can you talk a little bit about, you've gone into Mexico and kind of how you use the blueprint from Argentina to grow, and what are your plans for, let's say, the next 18 months that you can talk about?
Yeah, sure. So our plans to Mexico is one of our major bets. We launched just 3 months ago, and right now we just issued 3,000 cards. So we're growing steadily there. By the end of the year, we want to become the number one fintech in the country, which is super tough because when we got there was a lot of competition, and they're pretty mature companies working there in Mexico. Argentina is a smaller country, 40 million people. Mexico is way bigger, and they're just stronger players there. So the plans are big. We want to use at some point, if we understand that the very first steps that we take to Argentina will be the same for Mexico, we want to give the people just these basic products in order to build on top of it. But there's so many decision points in between. Just, I don't know, on the investment side, whether we want to launch just a money market or make sense to run crypto or whatever. That depends a lot on the way, on the market and what the users need out there. Mexico is super large. It is from the top of the country that is near the United States. The very bottom is a completely different geography, and the needs of the user are way different. So we need to understand that in depth. But the growth right now has been amazing. Yep.
It sounds like in Latin America, just the basic building blocks are such a huge opportunity, and then building the product base around it. You brought up crypto, so I'm curious how you see the future of crypto relevant to your product.
Myself, I love crypto. I'm not talking about Ualá. I love it myself. The thing with crypto is right now, with this comparing to a money market product that is a higher risk. So I wouldn't put it as the first product that we'd like to launch. We're super interested on it, but I think that this comes with the users, the level of understanding how we can approach that product in a way that the user understand. Yeah, crypto could go up 20% and 20% down, or 40% down in the next few weeks. If that's okay with you, just take it. If not, that's going to be tougher. But yeah, I think it's amazing what's been going on. But it's high risk, and that is the point with it is just trying to explain, and the user needs to understand super clearly what that means.
And it sounds like your user is just building the basics at the beginning of having an opportunity to be involved in the banking system. So perhaps that's way down the road. Yeah,
might be a little later. That's right.
Thank you. I want to turn it over to Claudio at Stash. I was actually going to play this video at the beginning, but I decided not to. I think we've all probably seen the Michael Bolton ad, breaking up with your broker, which has gotten a lot of social media laughs, I would say. But Claudio, can you talk about how you're using technology to be the gateway to investing? I mean, most of your users are new to the markets, new to investing. So how are you guys becoming the gateway to the new person?
Sure. And first, very happy to be here speaking. I'm also an NYU Stern alum, so it's great to have an opportunity to engage with the community again. With regard to your question for Stash, since day one, which obviously predates me, Stash has been on a mission to make long-term diversified investing easy and affordable, and that all started with fractional investing, which has been there since the beginning, from when Stash launched. So To me, I think that that's a big part of it, right? For our customer base, a lot of people are first-time investors, right? So there's the mental hurdle of sort of just demystifying this space and feeling like it's a big unknown, it's super risky. And I think that's where fractional shares really can come in and play to a new person's advantage, right? You only need $1 to start investing. So then the risk you're taking on is much more manageable, right? And just that mental hurdle of making a first investment and getting started, if you can do that with $1, right, it's just going to make things easier to build on from there. So for us, a lot of it goes with making it more accessible, and that starts with fractional shares, and then layering on sort of education and guidance to that, right? We're not a day trading app, right? We only trade within 4 windows a day. And a lot of our education and content preaches, an investing philosophy that's about investing regularly and diversifying and thinking for the long term, right? It's not about trading multiple times a day, looking at prices, right? It's just about creating a habit and a healthy habit where you're just investing what you can afford on a regular schedule and hopefully diversifying along the way.
I love that you have a rewards card program that actually, when you buy things in a certain store, you can earn fractional shares. As a retail analyst, that just is a happy place for me. So can you talk a little bit about that?
Yeah. So, customers, for the most part, know Stash as an investing platform. So when we expanded into banking 2 years ago with a checking account and a debit card, we wanted it to be built with investors in mind, and that's where the stockback card and rewards program comes into play. So when a customer makes a purchase with their debit card, if that's a business that's a publicly traded company, they'll earn a fractional share of that stock. That's a percentage of the purchase that they've made. So if you swipe your card at McDonald's, you'll earn McDonald's stock. And if you go to your local, grocery store or small business, you'll still earn a piece of stock. The users can sort of choose from an option of custom rewards where if they make a purchase at a business that's not publicly traded, they're still getting that reward. So for us, it's a super exciting feature. It's really helping to bridge that gap between banking and investing. And again, building in that fractional share angle, right? Everyone knows how to shop and spend. You have to do it. So if we can take that habit and also build on it and create an opportunity for someone to learn about the market and begin to make a portfolio, even if it's only pennies at a time, right? That's still helping break down that barrier. And when you think about companies like, someone might go to Taco Bell, right? But they don't know that Taco Bell is owned by Yum Brands, but then they swipe their card, they earn a stock reward in Yum Brands, and now suddenly they're realizing, that they're getting more information about, okay, this company, who owns it, that's publicly traded, right? It's an educational opportunity as well.
I love that. It's education through shopping. And have you seen what kinds of follow-on have you seen in terms of investing of the people who have received the fractional shares? Have they gone on to really become true investors?
Yeah. So we see that nearly 40% of customers who first received a stock through our Stockback Rewards program ended up making a follow-up investment. So in this way, Stockback is not only helping them save, but again, it's proving its value as a gateway for customers to explore new investments and hopefully build wealth for the future.
Can you talk about how else you encourage? We've heard so much about bad behavior in the headlines, right? So you're encouraging good behavior, and I love what you did during the whole GameStop. I don't even know what to call it, saga. What you did that week. Can you talk a little bit about that?
Yeah. So again, like I said earlier, Stash isn't a day trading app. It never has been. It never will be. So, we obviously saw what was going on with the GameStop craze, and of course, with investing sort of bubbling up into everyday news. As a result of that, we were seeing a lot of customers coming to the platform. So, we felt like it was incumbent on us to then just sort of double down on having sort of campaigns and events around the importance of diversification. So for that whole month, this whole month, basically following up all of that, we've been really preaching to customers who came to our platform that, right, it's about learning about the Stash pillars, investing regularly, diversifying, and thinking long-term, and highlighting tools like we have a diversification analysis tool that gives customers recommendations to help create a more diversified portfolio and reduce their risk. And we sort of preach that, reinforce that. We also have something that we call stock parties, and during the weeks where we sort of give customers the opportunity to earn a fractional share in the stock, and we focused during this time on some ETFs, some bonds, so we can also give people context to what actually makes up a diversified portfolio.
And I love that. And there's so much negativity surrounding gamification, but this is actually a positive gamification, which is very rare. And lastly, I was just going to ask you about data. How do you use data, and also perhaps your investment from Lending Tree? Are we going to see more direct products, or is it just going to be an ecosystem of links?
Yeah. I mean, for me, I like to think about data. So at the end of the day, something like a bank account is a basic utility, right? It serves a basic need for people. But today, it doesn't necessarily do a good job of helping people achieve their more sort of aspirational financial goals of building wealth, saving for the long term. So to me, that's where the power of data can come in, right? We know that our customers need help managing debt, creating a budget, and all of those, getting those things right are critical for them to be able to put themselves in a position to be able to invest and save for the future. So to me, the power of data, if we get it right, and this is something we talk a lot about, at Stash, is that can be used to create sort of personalized recommendations for customers to budget better, right? So that puts them in a position, I think, if we're doing it right, to move beyond the sort of basic needs of a bank account and start to get into real wealth building, where they're ending a month with by spending less than they're earning, and then hopefully that puts them in a position to pay down debt. And if they don't have any, then we can start talking about building an emergency fund or investing for retirement. And that's where I feel like the power of data, and also having a platform that offers banking and investing, really ends up paying dividends for the customer. We see today there's people who open a brokerage account and they don't necessarily invest anything in it. And if we call those customers, and it's not due to lack of intent, right? They really want to start saving, but they're ending a month with no money left in their checking account. So obviously that's the area where they need help, and hopefully through the power of data, we can help them get a more sort of balanced budget for themselves and set them up for success.
Sometimes data gets a bad rap, but actually it can help the consumer in so many ways. I'm going to pull in Chenni here. Hi, Chenni, how are you? We've talked about financial apps, investing apps, but I want to talk now about the super app, and maybe you can just take us through how that really works in the China ecosystem, and also maybe give us a little bit of insight on why payments are so far ahead in China, why QR codes are so far ahead, and what about the market kind of catapulted it in that direction ahead of the West?
Sure. Thanks, Stacey and Kathleen and Liz for the invitation again this year. I wish we could all be in person, but this is a good format for the time being. So yeah, to answer your questions, I can talk about the super app, but I think just to widen the aperture a little bit, to put it simply, there was a leapfrogging effect in China over the past decades from cash to mobile. And of course, the penetration of smartphones and mobile devices has helped with this. And not to mention the use of QR code technology, which I'll talk about as well. And now we serve over 1 billion users, customers, and 80 million merchants in China alone, not to mention the 10 e-wallet partners that we have in Southeast Asia. So I think we chose QR code over NFC, near field communication technology, back in 2011 due to the former being more inclusive and just easier to use. It's low cost. It doesn't require NFC hardware, which isn't available in all phones, but most phones have a camera, right? So you can just scan the black and white QR code. And interestingly enough, here in the US, I've seen more pickup of this, like by PayPal on the street, you'll see ads for them. And I think they're really leveraging the China and Asia playbook in that sense. And in terms of the super app, I think that, we really started with online payments. As you know, we started with being the payment provider on Taobao, which is the Alibaba seller-to-seller e-commerce platform. And our first Alipay user was actually this Chinese guy who was trying to buy a Nikon camera from another Chinese guy in Japan. And there was no solution for him to do that easily, so that he was our first Alipay user ever in 2004. And I think payments just provided a gateway for us to into other services to kind of help address customer needs. When I was listening to Marcelo's response, I just saw so many similarities with Argentina as well, just serving the unbanked and underbanked and people who, used to not have access to these financial services.
Would you describe yourself as a lifestyle platform? Is that an accurate description?
Yeah, I think you'll see our description as a digital lifestyle platform, and people don't know what that means. But essentially, I think it encapsulates the super app concept. So you can spend 24 hours of your life on it. I'd like to show it to you, but I don't think it's gonna. But everyone should download the app, even if you can't use it. You can kind of see the user interface, but it takes into account every aspect of your life. So, you can kind of order your Starbucks on there, your DD, which is the equivalent of Uber, your lunch, you can book doctor's appointments, pay utilities. So it's sort of integrated every aspect of the economy on there. And yeah, that is why so many people like using it a lot. And that's why we call it a lifestyle platform, beyond a fintech platform.
It's interesting. Over the past year, obviously the world has been largely shut down. And from a consumer perspective, the Chinese consumer is such an important piece of the puzzle, especially from a tourism perspective. So I'm curious, what you could tell us about the transition that's taken place, and also how brands around the world are now embracing your platform.
Yeah, that's really interesting because, like I said, we started out from online payments and we shifted to offline and point of sale. Of course, we're still all available on Alibaba and online, but since global travel has been curtailed by COVID, our focus here has been adding more e-commerce shopping opportunities for users worldwide. So connecting, U.S. merchants here with the large emerging Chinese consumer market, which the categories that are most highest spending are luxury, beauty, and sportswear, which aligns with our Alibaba trends as well. And also, so we launched with Shopify in November to be a payment solution on there, and we've seen great uptake with our Chinese customers using that on Shopify as well. So, yeah, I think we hope that tourism will come back, but in the meantime, we're looking at these online opportunities to provide our e-wallet solutions to them. Yeah.
Well, speaking to you from London, where we've been closed for over 4 months, I really hope tourism comes back because I've had it. I wouldn't be able to let you go before I ask you one last thing about how Ant uses blockchain.
Yes. So I've heard a lot about the other use cases on this forum today, but so we started our blockchain R&D very early on in 2015, and our priority is to provide real life applications of our blockchain. So that could be in provenance tracking and supply chain logistics and management, and in charity donations tracking. So these are kind of not maybe what you would think of using blockchain for, but that are among the 50 use cases that we have at AntChain, which is our proprietary blockchain technology. And we're very excited about that. And it's all about building trust in all sorts of industries to help reduce transactional costs and improve efficiency. So maybe kind of boring, but it's kind of a foundational element that we are really working on. And we're excited to increase our live use cases for AntChain globally.
Thank you so much, Chenni. Sadly, we are out of time, a quick 30 minutes, but thank you to all the panelists, Chenni, Marcelo, and Claudio, so much for joining us. It's been a pleasure. And so that wraps us up and for the next panel.